There's a private institution that can create trillions of dollars out of thin air, control the price of everything you buy, and decide whether you get a job or lose one. It's not elected, you can't vote them out, and most Americans don't even know it exists. Let me introduce you to the Federal Reserve. Here's a question. If you or I printed money in our basement, we go to prison for counterfeiting. So how can the Federal Reserve create $6 trillion during COVID and face zero consequences? Here's another. The Federal Reserve has federal in its name, but is it actually part of the federal government? The answer might surprise you. By the end of this video, you'll understand who really controls your money, why your savings lose value every year, and how a handful of unelected officials have more power over your financial future than any politician. Let's break it down. First, what even is the Federal Reserve? The Federal Reserve was created in 1913 after a series of banking panics nearly destroyed the American economy. Congress decided the nation needed a central bank to manage the money supply and prevent financial crises. But here's where it gets interesting. The Federal Reserve is not a government agency. It's a hybrid, part public, part private. At the top, you have the Board of Governors, 7 people appointed by the president and confirmed by Congress. These are government officials. Then you have 12 regional Federal Reserve banks. And here's the twist. These regional banks are owned by private member banks. That's right. Private banks own pieces of the Federal Reserve. J.P. Morgan Chase, Bank of America, Wells Fargo, they're all part owners. They even receive dividends on their ownership stake. So when people ask, is the Fed private or public? The answer is both. It's designed to be independent from political pressure, but accountable to Congress. In reality, it operates with almost no oversight. The Fed chair is one of the most powerful people in the world. They don't answer to voters, they can't be fired by the president, and their decisions affect billions of people globally. So the real question is, should unelected officials have this much power? Now let's talk about the part that sounds like a conspiracy theory, but is actually just how the system works, money creation. You've probably heard the phrase, money printer go brr. That's basically accurate. Here's how it works. When the Fed wants to create money, they don't literally print bills. That's the Treasury's job. Instead, they do something even more powerful. They create money digitally, out of nothing. Let's say the Fed wants to inject $1 trillion into the economy. They buy Treasury bonds or other assets from banks. But here's the key. They don't use money they already have. They create new money by typing numbers into a computer. Seriously, that's it. They credit the bank's account at the Fed with new reserves. Money that didn't exist 5 seconds ago now exists. No gold backing it, no labor creating it. Just keystrokes. During COVID, the Fed's balance sheet went from $4 trillion to $9 trillion in 2 years. They created $5 trillion. That's more than the entire GDP of Japan. Now, here's the question nobody likes to answer. If the Fed can create trillions of dollars with a keystroke, why can't we just print money to solve poverty, pay off student loans, or fix infrastructure? The answer is inflation. When you flood the economy with new money, each dollar becomes worth less. More dollars chasing the same amount of goods equals higher prices. But here's what's controversial. The Fed creates money for banks and corporations first. By the time it reaches regular people, prices have already gone up. So who really benefits from money creation, and who pays the price? Now let's talk about quantitative easing, or as I like to call it, the Fed buying assets with money they just made up. When interest rates hit 0 in 2008, the Fed couldn't cut them anymore. So they invented a new tool, QE. Here's how it works. The Fed creates new money and uses it to buy bonds, mortgage-backed securities, and other assets from banks. This pumps money directly into the financial system. In theory, this is supposed to help the economy. In practice, let's look at what happened. From 2008 to 2014, the Fed purchased $3.5 trillion in assets through QE. During that same period, the stock market tripled. Corporate profits hit record highs. But median household income barely moved. So the Fed's emergency measures to save the economy mostly benefited people who own stocks. And who own stocks? Mostly the wealthy. The top 10% of Americans own 89% of all stocks. So when the Fed pumps trillions into financial markets, guess who gets richer? Here's the controversial take. QE is essentially the Fed redistributing wealth upward. They create money, give it to financial institutions, and those institutions use it to buy assets that increase in value. Meanwhile, regular people see their cost of living go up without their wages keeping pace. The Fed will tell you they're supporting employment and maintaining price stability, but the data suggests they're really supporting asset prices and maintaining the wealth of people who own those assets. Is that the Fed's fault? Or is that just how the system is designed? Either way, it's worth asking, who is the Federal Reserve actually working for? So who pays for all this money creation? You do, through inflation. Every time the Fed creates money, it dilutes the value of the money you already have. Your savings, your paycheck, your cash under the mattress, all worth less. Think about this. From 2020 to 2024, the Fed created trillions of dollars to fight COVID. Your groceries now cost 25% more. Your rent went up 30%. But did your salary go up 25 to 30%? For most people, no. That's the hidden tax of inflation. The Fed creates money, prices go up, and your purchasing power goes down. You're paying for their money creation, even though you never voted for it. And here's the really provocative part. Inflation hurts the poor and middle class far more than the rich. If you're wealthy, you own assets, stocks, real estate, businesses. When the Fed prints money, those assets go UP in value. You get richer. If you're not wealthy, you live paycheck to paycheck. When the Fed prints money, your expenses go UP, but your assets don't grow because you don't have any. You get poorer. From 2020 to 2023, American billionaires increased their wealth by $2 trillion, while food bank usage hit record highs. The Fed's monetary policy played a huge role in both. So here's the question. Is the Federal Reserve's independence a good thing? Or does it allow them to make decisions that benefit the financial system at the expense of regular people with zero democratic accountability? Let's be clear about something. The Federal Reserve is not some evil conspiracy. It's staffed by smart economists who genuinely believe they're helping. But that doesn't mean the system works for everyone equally. One, the Fed has created over $20 trillion in the past 15 years. None of that money went directly to regular citizens. It went to banks, corporations, and financial markets. Two, since the Fed was created in 1913, the dollar has lost over 96% of its purchasing power. That's not a bug, it's a feature. The Fed's explicit goal is 2% inflation per year. Your money is designed to lose value. 3, the Fed claims to work for maximum employment and stable prices, but unemployment rates don't tell you about wage growth, and stable prices apparently means prices going up 2% every year forever. 4, the people making these decisions, the Fed governors, the regional bank presidents, come almost entirely from the financial industry. They go to the same schools, work at the same firms, and return to those firms after leaving the Fed. Is it any surprise that Fed policy tends to benefit the financial industry? Here's the question you have to ask yourself. If you could create unlimited money, set interest rates for the entire economy, and face almost no democratic oversight, would you use that power responsibly? And how would you even define responsible when your decisions make some people rich and other people poor? The Federal Reserve might be the most powerful institution in America that almost nobody understands. And maybe that's exactly how they want it. So what's the takeaway? The Federal Reserve controls your money more than your government does. They can create trillions of dollars, set the price of borrowing, and influence whether you get hired or fired, all without asking your permission. They claim to be independent to avoid political pressure. But in practice, they're also independent from democratic accountability. You can vote out a president. You can't vote out the Fed chair. Some people think the Fed is essential for economic stability. Others think it's an engine of inequality masquerading as a technocratic institution. The truth is probably somewhere in between. But one thing is certain, the Fed has more power over your financial future than almost any other institution, and you deserve to understand how it works. Because knowledge is the first step toward demanding better. If this opened your eyes to how the financial system actually works, hit that like button. Subscribe to Explainadoodle for more economics explained without the jargon, just the truth. Comment below, do you think the Fed helps or hurts regular Americans? I'm genuinely curious what you think. Next video, I'm breaking down inflation, why it exists, who benefits, and why it's not going away. You won't want to miss it. Until then, question everything, especially the people who tell you not to. See you in the next one.